Hi, welcome. Welcome to yet another episode under the webinar series of Get More from Mallapuram. Okay, and today we are very happy to share you that this is the 23rd episode, and we have been consistently doing this bi-monthly webinar series. And thanks a lot for all the people who have actually joined this webinar and keep sending us a lot of appreciation mails and for actually supporting us in doing this particular webinar series. Thanks a lot. Thanks a lot for actually giving us this particular support. And just like any other series of episode we have actually done before, we will first get into the real purpose. Why we are actually doing this particular webinar series. Okay, and before we get into that, let us see about the purpose. The purpose of doing this webinar series is only to provide clarity such that you will have confidence in actually purchasing any insurance policy, or probably you will have more confidence on the policies which you have already purchased. So it will be useful for you to enhance or to review your existing policies. So this is the main purpose for which we are actually doing this particular webinar series. And before we get into the main topic, let us actually do the declarations. Okay, the declarations what we do are, we do not represent any insurance company. We don't represent any insurance company under this webinar series. And at the same time, we'll be discussing issues which are related only to insurance. No politics, no movies, nothing. Okay. And at the same time, we are not intended to criticize any particular person during this particular webinar. But if at all it happens to criticize a particular product or a particular insurance company or a particular person, it is only by chance, but we don't intend to do that. Okay. And at the same time, whatever the points that we discuss in this particular webinar series, those are all personal and it can't be taken as an evidence under any court of law. Okay. So with these declarations, let us now enter into today's topic. And today's topic of the day, the 23rd episode, is 5 major benefits which are under trade credit insurance. Okay. So what are those 5 major benefits? Let's look into that. And the complete agenda for this particular webinar series is going to be like this. The first thing is we'll be doing a little bit of situation analysis, right? And then after that, we'll get into the main section, that is clarity for confidence, wherein we discuss a lot of things about the topic of today's webinar series, that is 5 major benefits of trade credit insurance. Okay. And then after that, we'll be getting into a section called think tank. This is where we tend to give a little more nitty-gritties of the in-depth benefits or the in-depth research of what are the points which are there and what are the coverages which are there. At the same time, what are the things that you have to take care while we are purchasing a particular trade credit insurance policy. Okay, and then after that, we'll be looking into what are the action points that you have to take as a business owner. Okay, so the trade credit insurance is specifically for the business owners. Okay, and especially the businesses which are involved in business to business transactions. Okay, we call it as B2B. Okay, so now let's get into the situation analysis. And by the end of this particular webinar series, by the end of this episode, you'll be very clear on why you have to go for the credit insurance policy, the trade credit insurance policy, and at the same time, what are the things that you have to take care and how you can manage the policy such that if there is any claim, there will be no hassles in settlement of the claim. Okay, you will be very clear of these things by the end of this episode with this webinar series. Okay, right? With that, let's now enter into the situation analysis. Okay, the situation analysis, if you look at what are the different kinds of situations that a business owner will be looking at. Okay, you need to take care of the finances, you need to take care of the raw materials, you need to take care of the production, you need to take care of the marketing, the sales and sales receivable. So everything need to be borne, need to be taken care by the business owner, provided they are the small, medium or micro enterprises. Okay, the large organizations are there they have the systems in place, they have the people in place, they have large setup of transactions and the people and the systems to take care of their credit policy. Okay, but what about the larger part of the business community, which who are could be a micro enterprise, could be a small or even a medium enterprise. Okay, so for them, what could be the situation that they are in? Okay, the situations could be like this. Most of the sales in B2B these days are actually happening only on credit. Why? Why do you think so? Okay, if you look into the situations which the business owners, especially the medium, small, and micro enterprises, they face, their most of those organizations buyers are the larger corporates. The larger corporates, they always bully down these small segment companies, wherein they will be in a position to demand on the credit sales. Okay, and there is no other way. You have to go with the flow, right? With that particular situation, when a particular business owner looks into the situation, he is always a little worried. Am I going to get back my money? Okay, even we have seen some cases wherein the largest to largest organizations, they also even falter, or they actually drag the payments to the small vendors, to the small suppliers. Okay, right? So these situations are there, and at the same time, most of the MSME organizations, they do not have a strong and a systematic credit policy management, because of the small resources what they have, the small little number of people what they have, and the multitasking what every person will be doing in the organization. It is really tough. It is really tough to actually maintain the credit policy in place. Okay, because they're all there in a situation wherein the buyer is on a demanding position. Okay, it's a buyer's market, right? And at the same time, if you look at, there is an inconsistent of payments which are happening, which will enforce the business of really getting confused on when they are going to get back their money from the market. So it becomes absolutely unpredictable. Okay, right? In this situation, they will also have probably one major payment which is stuck up with a one major client, and if that guy is not giving the payment, the entire business is at stuck. They just can't move further. Their working capital is actually getting constrained, and the bankers will also have a kind of impact on it, and the funding situation will become more challenging. And even the institutes they will feel little insecure in actually funding these kind of organizations, right? Okay, and the challenges in getting the in-time payment of receivables is something which they have to live with it. In those situations, how an business owner can actually look into the buyer's credit worthiness. Are they actually in a position to give back your money, because your goods or your services has been already given to the buyer, and now you are actually at an receiving end, and will be completely controlled by the buyer. You don't know what is the credit worthiness of the buyer, and the moment you got a new buyer in place, you will be jumped to do the sales with them. But when you got to know that this guy is not paying the money on the prescribed and also on the predefined and the pre-agreed credit terms, and if they are not paying, then that's the real big challenge what we face. You know, the major concern with the small and medium enterprises, they always want to do sales first, and they try to find some or other way on how to handle the receivables. And it's only because there's a lot of competition out there, and they're more focused on the sales, and sales always comes first than the receivables. Okay, that's the situation they are fixed in. So that's where in these conditions, if you look at, to have a real clarity such that you will have confidence in actually doing your business in these circumstances of the business credit and the credit on which you have to give your sales. Okay, what is the solutions that we have? Now let's do the discussion. Okay, now the discussion begins. Okay, the trade credit insurance. The trade credit insurance, the way how we describe this particular policy, we call it as it is nothing but the business owner's peace of mind. Okay, the business owner can be really at peace of mind, because even if the buyer is not paying back your money, there is an insurance coverage which is backed up and which will give away your money within the timelines up to 85% of the total outstanding. Okay, IRDA, the recent regulations in IRDA, they have actually even mentioned for in micro and small enterprises, they can even give up to 95%. Even if it is a single buyer on whom they want to take the policy. It is only suggested by the committee on October 2020. They have actually given a suggestion that even up to 95% they can actually give the credit payable, the claim payable to that particular clients. And this is specifically only for small and micro enterprises. Okay, so now let's look into such a wonderful product which gives a peace of mind for the business owners. Let's look little more detail into this product. Okay, now let's understand this product. How does this particular thing work? Okay, now if you look into the situation that there is a seller, right? And the seller will be doing complete sales, the transactions between the customers. So they have the customers in place and they'll be doing the transactions. What are the transactions that they will be doing? They'll be selling their goods and services to the customer, right? And this customer will be actually paying the money to the seller. Now, everything looks rosy, and unless all these sales are immediately on a cash on delivery kind of thing, or probably it is actually paid in advance. Okay, in those situations it always looks rosy. Now when the competition comes in, right, and there are so many people who are ready to sell at a discounted price, what is that you can do? Even though your product is of a high quality to the customer, but if somebody is actually offering it at a very low price, what is that you are going to do? Definitely to increase your market share, to increase your reach to the customers, you are going to provide on credit sales. And this is where the real trap starts off. The moment you give it on credit, anybody will actually try to pick up that particular product or that particular service into their organization, right? Now, when it comes to the payment, probably not intentionally, but probably because they might got affected with something else in their market, because of which their receivables got stuck. Because of that, there is a back-to-back triggering of the events which will happen, due to which the organization, the buyer, will not be in a position to pay back the money. So what happens to the organization if the payment is actually not coming up? Okay, so there is an outstanding payment which is there and which is always seen in the balance sheet as accounts receivable. So we need to receive that money back from the market. Okay, this is a huge, and I've seen even in situations wherein because of even this pandemic condition, it has gone up to almost 30 to 40% of the balance sheet figure is only the accounts receivable. That means you have done the business, you've given your product, you've given your services, but still you have not got your money back. Unless your money is back in, how are you going to pay for your suppliers, for your employees, for your people whom you have to pay, and even you need to take back the regular salaries for yourself, isn't it? How can a business organization sustain in this particular situation? They will go for the banker, They will ask for some loan, and banker will say, no, the loan is only again is the asset. You might even say, no, I have the accounts receivable which is out there. Probably some banks can actually discount them, but it again depends on what is the kind of credit worthiness which your customers or your buyers have got, right? So there are lots of ifs and buts in this particular situation. In this situation, the only solution what you can have, if you're well prepared, there is something called as trade credit insurance. Okay, and this insurer, once you have paid the premium and taken the policy, he will indemnify, he will pay you back all that money which is outstanding. Is it not good? Is it not so nice to have such a kind of wonderful policy for the business owners, especially for the organizations which is small, medium, and micro enterprises? It is a wonderful product. Okay. Now you might even think, what are the things that it actually covers? Okay. It actually covers these things. Okay. It covers and it gives the protection. It gives the protection to the accounts receivable against the non-payments. It gives the protection to the business and the business owner against the accounts receivable, okay, due to the insolvency of the buyer. The buyer is actually got stuck up in his business and he has become insolvent, because of which he is unable to pay. Okay? If that thing happened, no need to even wait for any number of waiting period. You can actually file up the case immediately with the insurance company. Okay, if the buyer becomes insolvent. Okay, now the second situation is if the buyer is not paying and is protracted default. What does that mean? Means the buyer is still in the business, he's still doing the business, but he's not paying back your money. Why is that he's not paying back your money? Okay, if those situation happens, then also you have this trade credit insurance which can actually pay back the accounts receivable. Okay, and at the same time, if you look at, there is also a political risk, and the political risk comes especially in the exports. Okay, wherein you have actually sent it to another country. The buyer is from another country, right? And because of some war which is happening, that person is unable to send back the money. Okay, it could be a war, or it could be like an the currency which got changed, so he's unable to pay back your money. Or it could be also like in a situation wherein his assets have been taken over by the government over there. Okay, or even in a situation wherein he is not in a position to pay back, because he got stuck up in some other situation wherein he can't pay you. Even these political risk, and there could be even an embargo kind of situation. Even in all these conditions can be covered in your trade credit insurance. Is it not so good? Okay, and see, there's a lot of tension there's a lot of pressure for the business owner. Is it not? Okay, there is a lot of pressure for the business owner in actually setting up the factory, in getting the raw materials, in actually getting the people for actually getting the production done, in getting out the production, and after that putting it, storing it somewhere, then selling it probably through a channel or through some dealers network, or some other way of actually doing the digital marketing kind of thing. Okay, there's a lot of effort, lot of focus in to actually get the sales done. Now, after doing entire effort and getting the loans from the bank to actually have the working capital to do the entire process and do the sales, and after doing the sales, if you are not getting back your money from your buyer, what could be the situation of an owner? The only solution is trade credit insurance. Okay, let's go a little more deep into it. Okay, so it gives a protection. It gives a protection against the accounts receivable, okay, and non-payment due to insolvency of the buyer, right, and due to the protracted default. That means he's still in the business but still not paying you the money, or it could be because of a political risk. Okay, now let's look into one more thing. How does it work? How does it work? Okay, let's look into step by step what will happen and how does it is going to cover the risk. Okay, let's look into step by step process. Okay, so the first thing, okay, let's look at the timeline. Okay, there's a long timeline now that we have actually drawn over here, right? Okay, so let's look at the timeline, and then on that let's look at the events which will happen, okay, one by one. So there's a seller or a trader out there, right, and he is going to give his goods and services to the customer. The customer has to pay back his money. Now, this goods and services which have been given to the customer is on credit. So there is a credit limit, credit period of say 30 days or 60 days or 90 days. It depends from company to company based on their credit policy in place. Okay, so they give it on credit, right? And after that, the customer has to pay back the money to the seller. The buyer has to pay back his money to the seller. Now, at this junction, the payment is not received within the stipulated credit terms, within that particular timeline. Okay. Now, what will happen? Okay. This period from the day when the buyer becomes default, okay, and he crosses the available credit term, okay, then there is going to be 30 days of cease shipment. Means the seller can still do the business with the same buyer but not beyond 30 days. Okay, within the 30 days of the buyer not paying the money, still the seller can still do the transactions but not beyond the cease shipment period. The cease shipment period is 30 days. Okay, say suppose the credit term is for 60 days and the cease shipment is for 30 days. That means after the sales have been done for 90 days, you can still do the transactions with the same buyer or the same customer. Is this clear? Is this clear? If it is clear, I request everyone to type in clear in the chat box. Okay, because if you understand this very clearly, then it becomes so easy for you to actually accept this particular policy in a way that you can actually leverage on this policy and grow your business. Okay, now let's see one by one. Okay, so there is going to be 30 days of cease shipment period, right? Now, how these customers are going to be judged by the insurance company. Okay, so even before we take the policy, what will happen? We need to submit our top list of 10 to 20 customers who are there, who are your top customers. We have to give that list of those customers to the insurance company. Okay, that's the first step. Okay, once we have given the list of customers to the insurance company, they will give it to their credit department, wherein they will do their third-party inquiry and they will assess the credit worthiness of your buyers. Okay, now to what extent do we need to give all the details of every customer to your insurance company? No, not required. So there is something called as DCL. That is this is the limit up to which, if the buyer is there, even if it's a new buyer, then you can still give the credit to that particular person, that particular organization. Okay, so this is actually called as DCL. And then to what extent you can actually do the business. Okay, only to that extent. If it is actually going beyond the DCL limit, okay, we'll get to know. Okay, somebody is actually asking me the DCL full form. I'll give you the entire terms which are used in this at the end, so that it will be easy for you, just like a glossary. Okay, thank you, thanks for asking that. Okay, so it is actually called as the discretionary limit, discretionary credit limit, which has been given to the insured person. It is called as discretionary credit limit. Okay, and after that, we also have something called as non-qualified limit. Okay, so non-qualified limit is the limit below which, if there is any claim, then it becomes not payable. So it doesn't qualify to be covered under this particular policy. Okay, so these are the words which will be used. Discretionary credit limit. So the seller on his own, he can discrete, he can actually go and do the business with that particular buyer. Okay, that's the limit. And beyond which, if he wants to go and extend the credit, then he has to come to the insurance company and take the approval, and then go back and then do the business. Okay, that is a must. Why is it so important? It is so important because once you give all this data to the insurance company will do the due diligence and the credit worthiness of your buyer. That's the biggest strength. Okay, once the insurance company establishes the credit worthiness of your buyer, it also becomes so easy for you to do the business, because there is no hassle. This guy is any which way going to pay you the money. You know that he has been consistently there in the market. And these buyers who need to be covered under the policy, they need to be in the business and should be into the business for at least 3 years. So you can't extend a credit to a buyer who's a new buyer in the market. You can't do that. Okay, even if you're doing it, insurance company will not be covering that particular risk. Okay, this is number one. Second thing is, even this policy will be given to only those businesses which have done the business for at least 3 years, right? So at least there should be some kind of credit worthiness which need to be established in the market. Otherwise it becomes really difficult to analyze the risk, right? Okay, so once here in this example, so the customer is now not paying the amount. Okay, so the payment is outstanding, and he has actually exceeded the credit limit. So that's when there's something called cease shipment period. That means you can still do the transactions with the same buyer, but not beyond 30 days. Okay, after which the shipment, everything will stop, the transactions, everything will stop. Okay, and this need to stop at least for minimum of another 150 days. Okay, the 30 days of cease shipment, and then after that, beyond of maximum of 150 days. We have some products in the market wherein somebody is actually offering it right from 30 days to 150 days, and so 180 days. Out of 180 days, 30 days is been removed as cease shipment period. Okay, so this becomes the entire waiting period. So after the credit term has elapsed, okay, right, after that term has elapsed, then a minimum of 180 days you have to wait, and keep trying about your ways and means. Don't sit back and then feel as if, like, no, the insurance company, any which way, they will pay you. No, you have to put in your effort, because all these evidences, you have to show it to the insurance company that you have put in the effort. Okay, so if you have not put in the effort, don't expect that the insurance company will pay the claim. After we put in all the effort, even if it is a different kind of, even a kind of threatening and getting back the money, all the ways and means that you have already done it, even after that the 180 days have lapsed, and then you can actually log in the claim. The moment you log in the claim, the insurance company will check through all the documents, and they will pay back your claim. They will pay your claim within 30 days. Okay, right? There are few situations which we have seen, wherein your buyer will just keep dragging on, and he'll pay a little amount and then he'll not pay the major amount. Still, he'll ask for some more raw material or your goods to, as a supply, and then he'll try to play around with your weakness. All right. Okay. So in this situation, after the waiting period, then you have to lodge the claim. The claim will be settled. Now the caution here is, after the sea shipment period, for remaining 150 days, you should not do the transactions with the same buyer. This is something which is mandatory. I hope this is clear. This is clear. I request everyone to put in clear in the chat box. Oh, thank you. Thank you. Thanks a lot. You're so nice people. Like now, you're just responding, and you actually give a lot of energy for us in doing these webinar series. Thanks a lot. Thanks a lot for all the people who are actually responding. Okay, right. Thank you. And let's proceed further. So now we understood how exactly the entire process works. Now let's understand what are those major benefits that you will get because of this trade credit insurance. Okay, the first major benefit is the bad debts are removed. That's the happy news. Okay, at least 85% of your bad debts is recovered after the waiting period. Kudos, it's a good news, isn't it? Right? Okay, and what are the benefits? Because of the bad debts have been removed, okay, your liquidity in the company is increased, isn't it? Your liquidity is increased, right? And then after that, your better funding. There will so many institutions which will be ready to fund, like banks or NBFCs or any institute. The lending institute will be ready to fund you because there's a lot of liquidity in your business, isn't it? Right? It's a good thing for the business owner, right? And you can save a lot of capital for your future expansion. Lot of liquidity coming in, lot of savings going on, lot of investments into the new growth opportunities can also happen, isn't it? Right? And at the same time, if you look at what are the other benefits that you can get out of this trade credit insurance policy, you can have the administrative freedom. What more freedom that you can have? Okay. If you look into the entire benefits that you can receive from the administrative freedom, is you can actually look forward for the growth perspective. You can look forward for the new expansions of your business, probably a new geography, that or a new plant in a different location, or probably a new different, or probably you want to back integrate your business, so you're integrating backwards, right? So having your own setup of supply chain, okay, right? So that can happen, and because of which you can give more employment for the people. You'll recruit more because you need more people to actually man your new growth, isn't it? Right? And pay to your suppliers, make them happy, so that they will help you to get your supplies on time, such that your production will go on continuously without any fail. Okay, and at the same time, you can even evaluate your buyer's portfolio, how good a particular buyer is. And you can also have your credit management policy in place, where you can categorize your buyers, say category A, B and C, probably category D, which you never want to do business with. And then you can actually focus more on getting the quality customers in place. Because any new customer any new customer who is coming in, if you really want to know the situation what they are in, what we can actually suggest, when a new customer comes in and this is the first time that you want to do the business with them, okay, you can send all those details to the insurance company. They will do the due diligence and they will come up with their credit worthiness of that particular buyer, and then you can do an informed decision whether you want to do business with them or not. Okay, so it's a great relief. It's a great relief for the business owners, because somebody is actually being along with you and supporting you in actually expanding your business. Because the new buyers, once they come in, they look absolutely rosy, but when it comes for them to pay the money, that's when you get to see a lot of colors from them. Okay, right? So that's how the trade credit insurance, the insurance company will be just behind you to support you in growing your business. See, look, many of the businesses, what we have seen, they have covered their assets, they covered their employees, they have covered even their liabilities. Okay, you know, the biggest thing which they always forget and tend to forget, they forget about the accounts receivable, which is almost like 30% of your assets in your balance sheet. Okay, your 30% of your money is not with you, it is outside in the market, in the air. Unless it comes into your pocket, you don't know whether you are actually making money or making profits or losses. Okay, and the only solution is have a right fit and a right design trade credit policy for yourself and your business, and have peace of mind, a lovely piece of happy mind in place, so you can do more amount of business, new growth, new expansion, new profits, isn't it? Yes. So let's get into the situation here. So you will have lots of administrative freedom, and at the same time, the other benefits, if you look at, you will have a better bank facility. What does that mean? The banker will, you can actually negotiate with them on the lending rates. Because you are actually paying them on time, your liquidity ratios are good, and you have a better financing terms with the bank. The banker will be ready to come to you and then help you out. And you can also even negotiate in increasing the fund size. Probably you can have a better exposures which are given by the bank because of your regular liquidity in place. Okay, and at the same time, you can actually even maintain a very better credit line with the institutes. Okay, and a better cash flow management will always give you a better liquidity and a better growth and better turnovers with the same amount of money. Isn't it so great? It's a fantastic. It's a fun. That's why we always say this particular policy of business trade credit insurance is a business owner's peace of mind. It gives a lot of peace of mind. It's almost like a peace of mind which is guaranteed. Okay, right? We'll see even the other major benefits. The other major benefits, there is an increasing sales. Okay, the sales are going to increase. Okay, how? Because now, even if you want to get into a very competitive market, because of the insurance company and their facility to help you to identify the credit worthiness of your buyers, you know with whom you have to do the business and whom you have to leave them to your competitors. Let your competitors do business with the uncredit worthy buyers. Okay, and at the same time, you can still explore new countries, new regions, new areas where you doesn't have anybody whom you know, and you still want to do business there. You have the insurance company credit facility department, which who will go there and evaluate all those buyers with whom you want to do the business. Is it it right? Okay, your discretionary credit limit can be enhanced if you're doing it very good. Okay, the DCL limits can be increased. Okay, and then the profitability will increase, and the more the profitability, the more the happiness. Isn't it true? Yes, business, a lot of challenges, and a lot of challenges still we can actually judiciously and scientifically we can actually transfer that risk to the insurance company. The insurance companies, they know how to handle this particular risk because they have been handling it since decades. It's only that we don't know about this particular policy. It is already there, but probably it is never told to you. Okay, right? And then now let's look into the next section, wherein it is all about the think and then thank. In this particular section, we look into situations, and we go a little more deep into the conditions of how it is paid, where it is not paid, what are those conditions. Let's go a little more deep dive into the topic, that is, what are the major benefits under the trade credit insurance. Okay, let's get into that. Let's look at what are the things which are not covered under trade credit insurance. Are you ready? Okay, if you're ready, just type in ready in the chat box. Oh, thank you. Thanks a lot. Thanks a lot for actually doing this. Okay, it's been so nice. You people are actually supporting us and responding us in the chat. Thank you. Okay, so the things which are not covered are, if there is a valid dispute between the seller and the buyer, and there is a real reason why he is not paying back your money. Probably it could be quality of your product, which is according to the conditions agreed that you have not given them, or could be any other, or they have ordered for some product but you have sent a different version of the same product, okay, which is not befitting into their existing condition. It could happen even, right? Or probably they have ordered for say 100 tons and you have sent only 60 tons, because of which they could not do a proper production in their work. There could be a valid dispute. If there is a dispute and because of which you are not getting your money, then the claim is not payable. Okay, and at the same time, if you're doing any B2C transactions, that means the business is directly transacting with an individual customer, okay, individual customer, then it is not payable, because the business trade credit insurance is only between the transactions that happen between business to business. It is B2B, not B2C. Okay, right? And then transactions within the same group of entities, like you have a sister concern, there is a transaction and the sister concern is not paying, and now you're claiming it against your own sister concern, not payable. Okay, because this is within the same group of companies, and even if it is known within the same family, and because see, there's a lot of now credibility which is out there, okay, and it is against the insurance, right? Okay, and at the same time, if there is any reverse factoring transactions which are happening, okay, even those transactions are not covered under the policy. That means there's a money which the your supplier, he need to get from you, but now because you need to get back from your buyer, you are actually showing those bills and asking an institute to provide a funding for your supply. This is called as a reverse factoring transactions. These reverse factoring transactions are also not covered under the trade credit insurance. Okay, right? And at the same time, non-submission of the documents. See, there are some regular monthly documents which you need to submit. If you're not submitting those documents, then don't expect the insurance company to pay the claim. Okay, you have to submit. Probably you can ask, what are those documents? Okay, so the required documents which you need to submit to the insurance company are like this. Okay, the first document is a monthly sales report which you have to generate and give it to the insurance company within 15 days of closing of your month. Okay, last month's sales, if you have closed it by 5th of this month, then before 15 days after closing the month, you have to submit. Okay, probably it could be cash sales, then an online transaction sales, and it could be credit sales. So all the transactions, you have to submit it to the insurance company. Okay, this is one mandatory thing which you people have to do. And the second thing is a monthly reporting of more than 30 days due invoices. Okay, more than 30 days due invoices, you have to give this statement also to the insurance company. And this has to be submitted on a monthly basis. You have to do it. Okay. At the same time, the monthly gross invoices which are due for future shipments, like there's already some sale which has happened, there's an invoice which has been generated, but the transaction has not happened, means the sending of the goods has actually not happened. So what are those future shipments which are due? Even that report you have to give it on a monthly basis, because the invoice has already been generated. Okay. The same time, the claim filing after the waiting period. So no need to file it before the waiting period, and especially if it is an insolvency kind of situation wherein the buyer is unable to pay because of his being insolvent, then there is no waiting period. You can just file up the claim. But if it is not the insolvency, but if it is some other reasons he is not paying the money, then you have to claim, you have to apply the claim after the waiting periods of 180 days after the credit limit of your time period. Okay, right? So these are the documents which you have to keep sending it to the insurance company. There is any delay of this regular submission of documents, don't expect the insurance company to pay your claim, right? And at the same time, the terms which you have to understand, in actually dealing with the trade credit insurance policy. Okay, the first thing is the cease shipment. Cease shipment means after the credit period, this is the period only until which you can still do the transactions with the same buyer. But after the cease shipment period is over, no more transactions. If you do the transaction, then the claim is not payable at all. That means you yourself, you are wanting to take the risk on yourself. Okay, right? So this is called a cease shipment period. This is 30 days. 30 days after your credit limit has lapsed. Okay. Now the second thing is about the waiting period. Waiting period includes the cease shipment period. Okay. So waiting period is inclusive of cease shipment period, and this is up to maximum what we have seen in the products in the market is up to 180 days. 180 days. Okay. And the waiting after the waiting period, you can file the claim. Filing of the claim, some companies they say it has to be done within 30 days after the waiting period. Some companies they also say you can claim, you can file a claim within 12 months after the waiting period. Okay, so we request to choose those products wherein you have the longer term to report the claim, because we have seen in some situations wherein the buyer is very close or is a very big buyer, and if you go against him, probably you lose your sales forever. Okay, so you may have to give a little more time if you think. So think about it, do your own justification, take the help of the insurance company, and then take an action. Okay, and at the same time, the DCL, that's a discretionary credit limit. This is the limit up to which if you are doing the transaction with the buyer within a financial year, no need to actually take any approval. That means to that limit, insurance company has agreed with you to go ahead and do the business. But if you're crossing this DCL, the discretionary credit limit, if you're crossing that, you have to take the permission with the insurance company, and then only you can have covered that particular buyer. If not, if there's any claim, insurance company is going to say only one thing: this credit limit is beyond the DCL and we can't pay the claim. Okay, these are the nitty-gritties which you have to take it, right? And at the same time, you also have something called as non-qualified loss amount. Okay, what is this non-qualified loss amount? This is the amount up to which if there is any loss and even you have not got your payment from that particular buyer, you can't claim. You can't claim. And along with this, even few insurance companies, they also put something called as deductible amount. That means this is over and above the non-qualified limit. They'll put the deductible amount up to which the claim is not payable. Okay, I hope this is very clear. Okay, so these are the four things which you have to understand in this particular policy: the sea shipment period, right? Then the waiting period, right? And then the discretionary credit limit, and then the fourth one is non-qualified loss amount. Okay, right? Is this clear? Is this clear? Right? You need any assistance. If you need any assistance in this entire process, this is the QR code, and here is the number what we have: 7569 645 645. Just dial up this number. Me and my team, we are always there to help you out and guide you in getting you the right kind of policy. And if you already have a policy and you want to review that particular policy, we're also there, and we want to do it free of cost for all the people who are there on this webinar, wherein we can actually do the entire review of your policy. Okay, and if required any amendment, we can still do that. We can go back to the insurance company, get your DCL limits or your non-qualified limits, NQL limits can be also even enhanced or decreased, okay, based on your requirement. So this customization need to be done. Okay, need any assistance? You are there. So you can take a snapshot of this QR code over here, right? You will get a form, fill in your details, give us your contact details. We'll come back to you and we'll help you out in getting the clarity on whatever the policies which you already have, or you are purchasing a new plan. You will have a lot of confidence in actually purchasing a new policy. Okay, and that's the real purpose of actually doing this webinar series, right? And coming back to the action points, what we are going to do. So always protect your smile, okay, and be happy, and make sure that your business is being taken care. Be it your people who are not paying the money, that's okay. Still have your cover in place so that you can still keep going and doing the business and expand your business. You are the people who are actually giving a lot of employment to the people in India, right? Okay, and you are the people who are taking care of so many families. It's more responsibility on your shoulders. So little more responsibility, and this responsibility can be secured. The business responsibility can be secured with the trade credit insurance. You take care of your car, you take care of your life, you take care of your children's education, you take care of your liability policies, okay, liability through the insurance policies. But most of the business owners, they tend to forget about covering, protecting their accounts receivable. That's their money, their asset which is there in the market. The only best way how you can cover this is through trade credit insurance. Okay, and what are the action points? The action points which we recommend for all the business owners who are there on this webinar series now, right? To just go ahead and follow up these steps one by one. Okay, the first step which we recommend every person is check your existing accounts receivable. How much of amount is actually receivable for you, and from which buyers are you actually need to receive that money? Are these buyers doing it intentionally, or that's the way how they are? If that's the way how they are, is that not impacting your working capital, your funding, and how much of strain that you need to take it? Have you ever calculated? Take out those details and look through those. And who are the top people who are really doing lot of pressure and giving lot of challenges for you in your business? Look through them. Okay, that's the first thing what you have to do. The second thing is review all these accounts receivable and those buyers with your finance people. Okay, take into account your finance person, right? And let him actually get into the sales people, and then ask them on what basis did they do the sales, and why are they not following up. If they are just doing the sales for the sake of increasing their sales numbers on an Excel sheet, but not getting the real revenue into the company, they are actually damaging you. Is it not? Is it not? It is. See, it is better to do a charity rather than giving away your goods and services with on credit and still not following up in getting back that money. Is it not true? Right? Okay. And at the same time, discuss all these things with your insurance manager. Okay. Take his help and design this particular trade credit policy for your business and have a peace of mind by implementing the trade credit policy. Okay. And make sure you are actually submitting your regular monthly declarations, your regular monthly statements to your insurance company after taking the policy. If you default on that, if you falter on that, nobody can save you even after having your trade credit insurance. Okay, right? So with that you need any help, me and my team, we are always there. You can actually take a photo snapshot of this QR code. We are always there to help you out. And you want to talk to us, you just dial up this number. It is 7569 645 645. This is the number. This is a helpline number on which me and my team, we are always there. We'll call back and we'll assist you in your business. Okay, and we are always there to support you. Okay, and that's how we are. And so with this, we come to the end of this particular episode, the 23rd episode, and that is 5 major benefits which are there under trade credit insurance. Okay, thanks a lot for supporting us and joining us regularly on this bi-monthly webinar series on every second Saturday and fourth Saturday from 4 p.m. to 5 p.m. Look you all, see forward for all you people on the next episode. Thank you. Thanks a lot for coming up.